Welcome to Achieve Wealth through value-add real estate investing. This is the show where the guru hype is banned and you get direct insights from commercial real estate operators. If you're a passive investor, this show can help you better understand investment opportunities. And if you're an active investor, the lessons from each episode can help you to become more effective in your own deals. Now, here's your host, investor and author, James Kandasamy.
Hi, audience and listeners. This is James Kandasamy from Achieve Wealth podcast. Today, I have Glen Gonzalez, who have been a big operator out of Austin, Texas. And Glen has deals which he have done in Dallas area, Corpus Christi, Killeen, and south of Houston, a city called Lake Jackson. And he is currently owning about 3,000 units. At some point, past few years, he owned like more than 4,500 units. And he also have a strong property management company previously, which used to manage up to 6,500 units. So he brings a really good value to this podcast. Hey, Glen, how are you doing?
Hey, James, doing great. Thanks for having me on. This is exciting.
Yeah. Did I miss out of any of the story behind you that you want to clarify?
Oh, maybe. I think where I came from, because that's people are always interested. We talk about all the success that we have, but I actually started as a maintenance man.
Wow.
I was kind of at the bottom of the barrel, picking up trash, and I was like a porter, right? Really. And then I was eventually painting apartments and fixing stoves and stuff. So when my involvement in the apartment industry started about 30 years ago. Wow. So I actually came through maintenance man, leasing agent, property manager, then a regional manager, director of operations, and so all the way through pretty much all the different ranks of property management until about 6 years ago when I started buying my own as the owner, and that really changes the perspective on apartments. You've got an operator perspective and an owner perspective. So maybe I could share some of that today while we're on the call.
Sure. That'll be really, really interesting. I mean, some of the big guys that I know in this apartment, such as like Ken McElroy, right? I mean, he started as a property manager, right? And I interviewed Eddie Laurin, who have done more like 1 billion in transaction as an operator. One of the big first advice that he told our listeners when I interviewed him like a few podcasts back was start from the ground, start to learn from the ground itself, or be a property manager, or be a maintenance man or porter, and then learn the business, because you can learn so many things. So it looks like you have that, coming from the ground experience, and now you have more than 3,000 units, and you used to have like 4,500 units, right? So which is awesome, right? So looking from the ground itself, right, up to the asset management, like when you are a maintenance man or you're a porter, what do you think about the owners?
Oh my gosh, I used to get so nervous when the owners would show up to one of my apartment complexes, because I was, my boss would call me and say, hey, the owners are coming. So I want to make sure this place looks perfect and everything is in order. And then they would tell me things like, if they ask you a bunch of questions, they would say, let me do the talking. So I was basically supposed to keep my mouth shut. And that just kind of made me nervous, because all the hype and stuff. So I don't know, you kind of think the owners are almost not like real people to some degree, but they are. They're just like you and me, right? We're just common folks. So.
Yeah, it's interesting. I mean, sometimes especially the maintenance crew, right? I mean, usually when owners comes into a property, like even when we go and visit our property, most of the owners, we talk to the office staff, right? Because we think they control the whole thing. But a backbone of renewal in the property is the maintenance, right? Because people are happy when work orders are being taken care, and people really like that, right? So we really make it a point to really take care of our maintenance people. And that's another advice for all the listeners out there. If you own a property, don't just look at the property managers or the leasing agents or the assistant managers, right? Go and say hi to your maintenance people, because they are really, really important. Don't you think so?
Absolutely. Yeah. I would add a little bit to that. When I go visit a property, I always speak with the property or the maintenance guys, always, because they will tell you everything that's going on that property, even the stuff the manager might not know. I mean, they know how often they're, recharging air conditioners or how often they're fixing things. I mean, they know the work orders like the back of their hand. But beyond that, they even know the tenants. I mean, they know which ones have pets and which ones don't have pets because they're in there doing work orders. They know everything, and I would say that they're often the ones that are neglected, right? Because I would like you mentioned earlier, when we go and do a site visit, a lot of times we'll sit down with the property manager and we'll talk about the leasing and the marketing and the delinquency and some of those common things. But rarely do we talk to the maintenance guy about, hey, is there anybody out here that's like a bad apple that's like creating a lot of havoc? And they will tell you who's dumping the trash out there. They'll tell you who's having parties late at night and who's got like 5 dogs in their apartment. They know everything. So yeah, my advice is, if you need to know what's really going on behind the scenes, get to know your maintenance guys.
Yeah, so I think it's also important during the due diligence process, right? Because sometimes we are with the brokers and we are with the managers, and you can see that they like to hide the people who know the real stuff, which is the maintenance guys, right? So try to get to them to ask more questions. Do you have any tips and tricks to to get to maintenance guys while doing due diligence so that, we can get the truth from them?
Yeah. I think part of it is just making them feel appreciated and that their opinion matters. I'll tell you this, just like I was sharing my experience, I used to get really nervous when the owners would come around because to me, when I was younger, they were very intimidating. Mm-hmm. So if one of those guys came up and wanted to talk to me, I'd be like, you're talking to me? So find a way to make them comfortable. Really at the end of the day, just make them feel appreciated for all their hard work and acknowledge that they are such a big part of the team. And when they feel appreciated and they feel acknowledged, trust me, they'll share with you a lot of important information. They may offer information that nobody else knows. They may say things like, hey, by the way, I would go check the roofs on building 3, right? Because we've had several roof leaks on that one building in the last 4 months. They know everything because they're doing all the sheetrock repairs on the inside, right? And so they even know where it's leaking. It could be around the chimney or something, and you're like, oh, good idea, thanks, I'll go check that. Yeah. So due diligence, maintenance guys, you're absolutely right.
The other thing that we do, just to share with the listeners, is we also ask the maintenance guys to rank the property managers. So it's not only like property managers control the whole thing. I think 6 months once or once a year, we do this 360 feedback on the property managers from the maintenance, right? Because sometimes you need to give them the voice, right? And I think we have to just give them an official channel for them to voice what they want to share in terms of how the property managers are doing, how the office people are doing too. So
and I've shared this with some of my friends in the industry that you'll never ever have a successful manager without a successful maintenance guy.
Absolutely.
And vice versa. If one of them are really good at their job and the other one is not, you will not be maximizing the value of that apartment complex. I mean, it's just like it's almost like a marriage. The manager and the maintenance supervisor, they're married at the hip. They've got to be on the same page. And if they're not, if they're complaining about each other, that's an opportunity to stop and pause about why they're not on the same page. So just FYI, and if one of the maintenance guys, like you said, gives a rating to the manager of a very low number, like, that manager is a 2 at the best, you might want to go talk to the manager and like, how do you rate your maintenance guy? He's like a -2 at best, and then all of a sudden it's like, what's going on? And, and who knows what the problem is, but boy, you could then read the financials, and the financials will tell you the story too, right? Because if you're way out of budget, say the maintenance guy's not very good at painting, so he wants to contract out every paint, and your turn cost could be very, very expensive. There's a lot of things that you could learn from each other. Yep. That's wise on your part.
Absolutely. So how did you climb that ladder, right? From porter to maintenance to, to become owner now?
It's a funny story, James. It's a really funny story. To be honest with you, I'm out there trying to do work orders, and I started my industry in Salt Lake City, and it's really cold outside. So when you're picking up trash, you're freezing cold, especially when you have to, you're going from apartment to apartment, you're carrying all this stuff. Anyway, so I told my boss, I don't want to be a maintenance guy forever. I want to be a manager, because they get to sit in the office and talk on the phone. And that was my motivation. I was young. I just don't want to be out in the cold. So they're like, well, we don't have any openings for maintenance guys to be managers. I'm like, well, just, that's my next step. So they had a 60-unit apartment complex that needed, a part-time manager and a part-time maintenance guy. So I said, I'll take it. So I was part-time on each one of those. So I got to learn the manager skill and, talk on the phone. And then I had to do the work orders and the make readies. And I learned this valuable lesson. Somebody moved in and they had to fill out one of those make ready, not a make ready, a move in checklist to make sure that the unit's in proper condition when people move in. And they turned it into the manager after they signed the lease. And it's got all these things that don't work. Stove doesn't work right. Toilet's, running, and the dishwasher, won't cycle or whatever. So they're like, I don't know who fixed this apartment, but you need to get it back. So I'd go back later in the day and I'd do, take my tools and change my clothes. And they're like, hey, what are you doing here? I'm like, well, I'm the maintenance guy. And they're like, oh, so you're the one that got this apartment ready? And I'm like, yeah, that was me. And I realized then, I was not a very good maintenance guy. Okay. But that was my transition. But I really was able to turn that apartment community around. And it was struggling with occupancy and revenue. And it got to the point where it was doing very, very well, because I kind of was able to see it from both sides. I knew how much we could rent them for, but I also knew we had to get them ready first. And I worked my little magic as a newbie to the industry. I was very successful. Well, my boss recognized the success, and they had another, I think it was a larger, I don't remember exactly, 200 or 300 units that was struggling with some of the same stuff. And they asked if I would go over there and give them my opinion. So I went kind of as a manager over to this other community and found that the leasing agent and the manager were really good friends. But that leasing agent wasn't very effective at all. And the manager was too good of friends to fire her friend. So I said, well, let's do one of those secret shops and do an evaluation, and kind of did all that. And I showed the manager, look, you're not a very good manager because you're not able to make a business decision, because you got to make changes on the leasing, and that leasing agent's affecting you as a leader. So she kind of said, she realized at that time that if she wasn't able to make an improvement or a change, it was going to stifle her own career as well. So she made that change, and all of a sudden the leasing got better and the collections got better, and people were, giving better reviews. And my boss recognized that I had this knack for identifying problems. Well, then I got to oversee multiple apartment complexes, and I became what's known as an area manager. So I had 2 or 3 that I could oversee. So my career just started kind of progressing a little bit. I graduated college and I was supposed to be a hospital administrator. And I did an internship at a hospital and did not want to do that the rest of my life. So here I was at a crossroads, maintenance man to manager / hospital administrator. Now what? So I said, I'm just going to make property management my career. And then I just started getting more educated with a real estate license. And then I eventually got my CPM designation and was involved with, the apartment association and stuff. So there you go. That's kind of how I moved up the ladder a little bit.
So at what point did you buy your first property? I mean, syndicated or, start using some other?
Sure. That's a great question. So in the time frame from that point, it was probably another, 10 or 15 years later.
Wow. Okay.
I was now working for a big REIT, a real estate investment trust in the Pacific Northwest, Equity Residential. They're a very big property owner manager REIT. And I was getting great experience there. While I had a mentor that was, serving on the board of directors for the apartment association. His name is John Gibson, also from Washington. And I went to John. I said, John, I want to buy an apartment complex someday. And I showed him this little 60-unit deal that I was analyzing. And at this time, I was still a regional manager. I still got a W-2 paycheck. Well, I went to John and I said, tell me what you think. And he said, you'll probably do okay. He said, but I have this little 44-unit apartment complex I'll sell you, and I'll make it much easier to buy. I said, how so? He's like, you just need to come up with $150,000 down payment, and I'll carry a note back for the rest. And I said, great. Let me go look at it. So I went and looked at it, and this guy wasn't managing it very well, and I knew how to manage pretty well. So I'm like, this is we can make money on this. So I went to two of my friends, and I said, do you guys want to go in on this apartment complex with me? They said, what do we need? I said, $150,000. And they said, what are the splits? I said, a third, a third, a third. And they said, okay. I said, but you each have to put up $75,000. And they're like, well, if we're a third, a third, a third, shouldn't we split that 150,000, a third, a third, a third? I'm like, but I didn't have any money, right? So I'm like, I found the deal. We're going to make money, and you guys put up the equity. You guys will get your money back before me, but once we start making money, we'll split it a third, a third, a third. And those two friends said, all right, sounds good. We did it. We bought that apartment complex. He carried a note back, and we owned it for like a year and a half. And we sold it for about $1 million more than we paid for it in 8 months.
Wow,
so
that's awesome.
So that third, a third, a third, those folks were pretty happy. So the mistake I made is when I sold it, I carried back a note on part of our profits, and the guy that borrowed or bought it from us defaulted on that note. So I actually, even though we made a lot of money on paper, I lost half of it to a bad note. So word of the wise, if you're going to be a lender, to a buyer, do your homework. I didn't.
Oh, so you become you seller finance to someone else, I guess.
Yes. Yeah. Part of it. Yeah. Yeah. We still pocketed $500,000. So, I mean, we did okay, but we carried a note back. So
got it.
That was my very first deal. It was 44 units, and it was while I was still working as an employee.
That's very interesting, because you really came from the ground up and you made that transition to an owner, and you found the deal and you were able to convince your friends to finance it. So at what point did you had the realization that, hey, I'm a regional now, I want to buy? And why did you want, that thought process came in? Why did you want to be an owner?
Well, a couple of reasons. One, I knew that these owners that came seemed like they had a lot of money. In my mind, it all seemed like they were rich people. Right? They drove fancy cars and stuff. And from my perspective, they were wealthy. But the other one is I realized that when I got really good at property management and I increased the value of that apartment community, that owner would eventually sell that property, and he would take his money and run, and I would get a thank you. He would get a lot of money. And they always said, Glenn, we really appreciate your property management efforts. You've done very well for us, and thank you very much. So I got a lot of thank yous, not a lot of dollars. And, that was a motivation for me. It's like, someday I wish I can create that value for myself. My wife always encouraged me. She's like, you're really good at making other people a lot of money. Someday you got to do that for yourself. And so that was a motivation too, is, you get really good at property management, you should maybe be the owner. So, but I had no money, I didn't have any money. So
no, but you have that knowledge, right, on how to increase the NOI, right? So which is the most important, I would say, right, compared to having a lot of money and buying assets. If you do not know how to increase NOI from the ground up, you may be just half blindfolded, right? So
yeah. And I think, what made me successful later in life is that experience and the knowledge that I had from the ground up gave me great insight in helping me find good deals that I could fix if they're broken. And then I later in my career, about 6 years ago, right, started buying my own. And I remember having to raise, over $1 million on my first deal. And when people realize that you have experience, you know what you're talking about, and you came from the ground up, they're more likely to invest with you than they would be with somebody that has no experience, thinks, they'll just go syndicate a deal with no experience. So, the experience really paid off in the end for me,
Yeah, I'm sure it's paying off right now itself. So I want to go into some of the secrets in property management because you are the insider.
Yeah.
You have become an outsider now, right? So,
yeah, that's right. That's right.
Because for me, my wife, she does a lot of property management, and just because of the knowledge that we have in asking questions to our employees, all our employees doesn't really tell us stories, right? They don't tell us like it takes 5 days to make ready or 2-3 weeks to make ready and all that kind of thing. There's a lot of, property management is a people business, right? There's a lot of detailed things happens inside the property management itself. And if you do not know the detail, then people just can take you for a ride. Let's go
into, very true.
Yeah, let's go into the details, right? So how would you know a leasing agent is not a good leasing agent?
So great question, James. There's indicators that are quite obvious, but then there's some that you kind of have to peel the onion back a little bit to figure out. The first indicator is if your occupancy is struggling, where all your competitors are, say, in the 90s, and your property is like in the 80s, and you have enough product that's already made ready, and it's priced correctly, but gosh, people are just not leasing. So that could be an indicator. There's remedies to that. You can hire a secret shopper that will come and pretend to be a renter, and they will give that leasing agent an evaluation.
And what does this secret shopper do?
They pretend like they're an average person coming to rent an apartment. They give a name, they go on a tour, and they kind of evaluate whether or not the leasing agent was able to connect with them as a renter. If they took them on a tour of the apartment, mostly if they followed up to say, are you still interested in renting? Some leasing agents never follow up. Some agents aren't able to connect with people, like emotionally connect with people, because renting an apartment home is, it's an emotional decision. There's apartments everywhere. So the only thing that makes, your apartment maybe different than your competitor's apartment may be that leasing agent. So, if the indicators are there, there are remedies, but sometimes you just got to peel the onion back. And what I mean by that is you just need to listen to how they talk to people. You need to get feedback from the residents. As an owner, you can always send out a little flyer or a little questionnaire. We get what's called a move-in report, where it talks about who moved in the last 30 days. I look at those move-in reports to see if they've hit their, the targets on the rents and stuff. But you can send a little questionnaire, or you can even call them on the phone as the owner and say, tell me about your experience from the time you moved in till now, and that'll give you a lot of insight. The other thing is the closing ratio. There are averages in our industry about if 10 people apply, what percent actually come back and sign a lease and move in, and that percentage could be anywhere from 30 to 40% of the people come back. Now, granted, some of those get denied because of credit and criminal activity or evictions, and we expect that. But if some leasing agent has a closing ratio of 10% or 15%, you'll want to stop and say, there's a problem here, because that's below the industry average. And where do you find those industry averages? Well, you got to talk to people in the industry. They're not widely publicized on closing ratios, but that information is readily available. You can get it through the apartment association. You can get it through people who own and operate apartments. And you just ask, network with people.
Yeah, and what do you do if the leasing agent gives reason saying that our apartment is priced too high?
Well, you trust but verify.
Okay.
She could be right. If they have a low closing ratio, and you as the owner said, hey, we renovated this unit and I know we can get, $1,000 for these 2-bedroom units, and all your competitors and your leasing agents saying, yeah, but all my competitors are at 950 to 900 and you want 1,000. If you argue with the leasing agent and say, but I spent so much money and I need to get 1,000 out of this deal, she's going to get frustrated and so are you. But if I were you, I'd go verify that. If the leasing agent is saying all your competitors are renting their 2 bedrooms at 950 and she's right, you as the owner better eat some humble pie and take her word for it. And when you get the facts verified, you better adjust your price because, you may lose a good leasing agent because you're a bad owner.
Correct. Yeah. So
go the other direction.
It's important that because sometimes, as owners, we might have a certain pro forma on rents, and that may not be true, right? Because you are doing it pre-closing. You only when the rubber, meets the road, then you really know whether whatever you projected in your pro forma is being able to be, captured the ground or not, right? And it's very important skill to identify whether you did the correct one or not.
That's correct. I had a boss of mine one time. He was the CEO of a company, and he said this to me one time. He said, if it comes down to your opinion versus my opinion wins because I'm the owner, right? Okay. He says, but if it comes down to my opinion versus your facts, and your facts are right, doesn't really matter what my opinion is. The facts always tell the truth. That's why we do market surveys. That's why we figure out where our competitors' occupancy is. And if you're a good owner, you'll realize that sometimes the information is right in front of your face talking to you, and you're just not willing to listen.
Correct. There's a lot of data that we can use to really see, whether we have priced it correctly or not, right? So such as how many people are applying, how many vacancy you had for that certain configuration and all that, right?
Yep.
And how do you select a good property manager?
Oh, that's a tough one. That's a really tough one. Yeah. Gosh, I have in my career, when I was an asset manager for Pacific Property Company, I think we had like 8,000 units, and we had hired 2 or 3 different property management companies that did fee management for us as an owner, and I was an asset manager. But some of those were some big name brand management companies that had all the bells and whistles. But what it came down to, James, is it came down to 2 individuals. How well did that regional manager and how get along with that property manager? And how often is that regional given support? If they are pretty well connected and they're good communicators, chances are, all the other things will fall into place. The bills get paid on time. And, if the manager needs some overrides or permissions from the regional and they're on the same page and readily available, that property will flow better, right? Sometimes I've seen that a regional manager may have 9, 10, 11, or even 12 assets in their portfolio. How often can an effective regional go visit 12 assets in a week or a month or 2 months? Not very often, right? They're going to be spread so thin. The trick is, and I know a lot of fee management companies are moving away from this, but their profitability increases because they get a management fee, increases when they have one fixed cost of a regional manager spread out over many assets. So from the property manager's company's perspective, they may give that regional a big portfolio to cover their salary. You as the owner want that portfolio to be small because you want their undivided attention. So that's a good question you can ask a management company is how many assets are in that regional manager's portfolio and how often that manager has worked with your property manager on site. Those are 2 key elements. And of course, the other big one is the back office. How often are they, producing your, financial packages, and are they reconciling every month? And do they catch the bounce checks fast enough? The back office people don't really jump into as an owner. They just, look at what's presented to them on the front end. So there's lots of good bells and whistles. So
very interesting. So what is the good ratio for regional versus property that they manage?
Yeah, it's a great question. I think an effective regional manager shouldn't have more than 7 or 8 assets in
Okay.
their portfolio. That number can go up, to 9 or 10 if all of those properties are maybe smaller, where they've got one manager that oversees 2 or 3. That helps, or they're all stabilized, right? They're all stabilized assets, and they're all doing very well. A regional that could then, handle more. But if the regional manager has a new lease up, or a repositioning, or undergoing a renovation, or you're trying to change the demographic a little bit, those are very, very time consuming. And if that's the case, you don't want them to have more than 5 in their portfolio. So there's a big range there.
There's a big range, I think, right? So
Variables are stabilized in the size and then the complexity of the assets that are in the portfolio.
yeah, that's a very interesting feedback on the regional, because and I know is property management is a business of issues, every daily issues, right? Which a lot of asset managers don't want to touch, right? They say thankless job, we don't want to touch it and all that. But how important do you think property management in terms of the efficiency or the NOI optimization of a multifamily?
Again, it goes down to that regional manager and the property manager. I guess the fixed costs are, do some property managers charge you more, a larger percentage of the management fee? That's a cost that's going to affect your NOI. The property management company has to have some buying power. Hopefully they buy so many carpets and so much paint that they get significant discounts on the product that they purchase, and they pass that right along to you as the owner. That would be a great benefit. If you're paying, call it $10 a yard for carpet installed, and the property management company can get it done for 8 or 9, that's pretty significant over all your CapEx. So all those are little variables that you need to kind of ask what kind of benefit you get as the owner. And some of them are the opposite. They're very expensive. Some of them pay for very expensive software for the property manager, and they pass that right along to you as the owner. And you're like, gosh, this is expensive every month, And then you start asking about this fee and that fee, and there's like an accounting fee on top of the property management fee, and they charge you a fee for processing your own payroll, and you're like, why am I paying you to process my payroll? And that part of the services, and like, oh no, that's an extra, So gosh darn it, you just got to dive into it, to be honest with you.
Yeah, it's
that's a good question.
I mean,
it's really complicated. Call me and we'll talk offline. Yeah,
that's good.
I used to be a property management company, right? I own 1,500, and I know there's areas that the management company wants to make money on.
Correct.
And it doesn't always benefit the owner. It benefits the management company.
Yes. But I mean, we have to understand property management is also a lot of work, right? And they are the backbone of your operation, right? So choosing the right property management and, how the profit centers and all that is how everybody manages itself.
Yeah. James, if you step back and you realize sometimes it's worth paying those little fees to these property management companies if they're really good at what they do. Because if you step back, if they're really good at what they do, they're going to make you millions on your asset.
Correct.
If they're not very good at what they do, they're going to lose you millions on your asset. And here's the key. Sometimes they just make excuses on why they're poor performers. And I struggled with a very large management company at 30,000 units. I owned a 650 unit apartment complex up in Dallas. And my occupancy was going down and down and down, and the bad debt was going up and up and up. And I'm like, what in the world is going on here? And they said, well, the submarket is getting worse.
Correct.
And I scratched my head. I said, well, how could that be? Because our competitors are at 94 and you're at like 81. They're like, well, that's because they have just filled it up with junk people. And I'm like, well, I talked to the owner of that one, and they said their delinquencies is only like 2.5%. And you guys are like 7%. I mean, that doesn't add up either. So it's not, what's really going on. And they were a mess. They were going through changes up above, and they had fired two regionals that quit because of the leadership, and the property manager had quit because she didn't like the management company. And my 650 unit was struggling financially now after it had just had its best year. Her name was Letty. She was the property manager for us for a year and a half. When Letty left, everything unraveled. And I ended up having to terminate that management contract, and I gave it to a different management contract, to a different management company. And they were very successful, and they turned it all around. And I was selling that complex about a year and a half after the new property management took over. And guess what? They outperformed all of the, and it was the same submarket. It was the same community. So all the excuses the previous management company gave me, it was just a bunch of BS.
Yeah. It takes a lot of leadership to really fire a property management, because, as an asset manager who just know asset management, your hands are tied, right? You can listen to one excuses this month, and next month they're going to give us the same excuses. But at what point do you make that call saying that, okay, these guys are not good, right? So it's very hard for you to make that call if you do not know the details on and how to read the financials. Like you say, the owner on the comms, right? But not everybody knows the owners, right? So how do they find out, right? They could be very well true that they're bad people, right? So do you have some tips on how to identify bad property management? And at one point should be fired.
I know a couple of them by name.
No, we don't need names.
I can't say it on the podcast. Call me. How do you identify them? Here's one indicator. There's a lot of turnover from key people. If the bookkeepers are quitting and the regional managers are quitting and the property managers are quitting, if you can't have access to interview all those people and talk to them about why they're quitting, you're losing out on an opportunity. But that will tell you, that's an indicator. By nature, I think we turn over about 30% of the site people a year, one of the indicators that I chart. So if you're up to 40, 50% of your site people move, including your maintenance guys and your leasing agent, but if you're up above 30%, there's a problem. Either with the leadership or how it functions, or they just can't get enough training. There's something going on, because people don't just walk away from their jobs, and they're, and the way to indicate a good management company is if they've got, long-term employees that, stay with them long-term over and over and over again. So, there's some indicators there.
Okay.
And your intuition, let me just address that. If for some reason a property management company is telling you excuses over and over and over again, and in your mind it doesn't add up, but your gut's telling you something's not right here, I would say trust your intuition, because there's probably something not right there. Got it.
Let's go back to the most, as you said, the most important person in the whole pipeline, right? For an owner, asset manager, right? So you have leasing agent, you have property manager, you have regional, and you have the property management leadership, right? So you said, if I remember correctly, regional is the most important on how they communicate and take
the regional and the property manager. Those two together.
Both two, okay.
Yeah, together. Yeah.
So how do you identify the qualities of a good regional?
Yeah, the good regionals, you can always tell if they're pretty effective, because you can ask them a question about, call it turnover expenses, or, we noticed this big expense for HVAC, and that regional says, you know what, I noticed that too, because the manager had booked it up in the operating expenses and I reclassed it to CapEx. And if the regional knows what's going on how the property is spending their money and where they're booking it, she just knows it, or he knows it right off the bat, they're on it, and they are on it. And you should be very grateful that they're watching your asset and your financials pretty effectively. Now, if you ask a regional manager, hey, what's going on? Why did our NOI go up? And she's like, I have no idea. Let me get back with you. And you're like, okay, get back with me. Let's talk. And he never gets back with you. And you send him another email, says, what did you find out? I mean, our NOI took a dip 10 grand this month, and it's been pretty consistent. What's going on? if you have to follow up more than 1 or 2 times, dude, you've got a problem. Mm-hmm. They're not looking at your bottom line. They're not talking to their manager, and they're certainly not watching your asset.
Got it. Okay, that's very interesting.
Yeah.
So let's go to a bit more personal side. Is there any moment in your whole career when you started in real estate up to now that you think is there a proud moment that you always remember? You're going to remember that proud moment for your whole life.
Oh, that's a good question. You should have given me some lead time on that one.
Proud moment should come think of a time because
I'm
really proud that I did that. Right? It can be anything.
I think part of it is a feeling of satisfaction that I get. When we syndicate a deal, we bring investors together and we take that money that they've trusted us with and we apply it to the apartment complex, and we do what we said we were going to do. We renovate the office and we raise the rents. And then, down the road, you step back and you look at the community and you're like, wow, this actually looks better than it did when we buy it, and then it feels better and our delinquency's gone down. It's almost like your baby, right? It's like your kid, your little offspring. Like, I'm so proud of this community. And then you sell that and you give all the investors back their money and they call you on the phone and they're like, Glenn, dude, I'm so happy you actually did what you said you were going to do and did better than we expected. That just, to be honest with you, I get so much satisfaction out of that. And I like making other people money, and when that happens, they don't mind sharing the profits with me. And now I'm making money. Mm-hmm. So it's not always about the money, but it's about, doing what you said you were going to do and doing it well and kind of being the best in the industry. Not all deals have gone as planned. Not all deals have been successful, and those are tough pills to swallow. But I think for the most part, my greatest in my career is seeing the magic that we work and executing the plan. I love that. It's, and then there's one other, if you don't mind me sharing.
Yeah, sure. Absolutely. Okay.
There's a gentleman that was a maintenance guy that would come and talk about, if you spend this, I think we can get more rent. If you fix this over here. And, really, I wouldn't even do anything on the 1 bedrooms because, we have so many of them, we can't even rent them, but we can make a lot more on that. I took that maintenance guy and I said, have you ever thought about being a property manager? And he's like, no way. There's no way. That's the last job I want. I'm like, but you think like a property manager. And this is just a deal here in Austin that I was managing as a fee manager. And I convinced him, I said, dude, you could do this. And he did. He got out of his comfort zone and we moved him from outside to inside. And he was the same way. He was so effective. I love the way he processed. And his name's Lewis. And Lewis was a very good manager. He had a wife and a child. And he was later moonlighting for a company, for Best Buy. He was working there in the evenings and on weekends and stuff to make ends meet for his family. And we were at lunch one time talking, and I saw what he had done for the community, right? The occupancy went up, it had stabilized, and he was right. We were making more money on the 2 bedrooms. And I told Lewis, I said, Lewis, why don't you quit? How much are you making at Best Buy a month? He's like, I get an extra $800 or $900 a month by working kind of part-time on the weekends. And I said, if you were able to just devote more time to the community, do you think you can make it more money? He goes, I just can't afford to not. So I told Lewis, I said, let me raise your pay by $1,000 a month if you quit that job. And I said, then you could be a better husband. You could be a better father to your kid, and you won't be so stressed. You don't have to work every single weekend because you're going to get burned out. You're going to get sick, and then you're eventually going to quit. And, he's a grown man. He just started to cry right there at lunch. It was kind of uncomfortable. He's like, why would you do that for me? And I said, because I see in you great things, Lewis. And I said, you should be a better dad and a better father to your child. If you're gone all the time, you're going to look back and you're going to say it wasn't worth it. So the community had benefited so much from this guy, it could afford to give him a $12,000 a year raise, and it would have zero effect on that property's bottom line because he had increased the NOI. And he stood up. He was tears in his eyes. And he's like, I'm going to go give notice. I said, and I'm going to raise your pay this afternoon. And he gave me a big hug, and we've been friends ever since. He's very successful, but that was a proud moment where I identified that it's not always just about the money. It's also about being a good dad, a good husband, and having less stress in your life. And sometimes we could take real estate and make dreams happen for people. And that was a good moment in my life. That wasn't that long ago.
It's very fulfilling, right? When you impact people's life, right? I mean,
Yeah.
you can make money in many ways, right?
That's right.
Sometimes you make a few $1 million and then you forget about it, and you give to investors and you forget about it, and you couldn't buy it. But when you impact someone, it follows you throughout your life, and you remember that.
Yeah.
That's a big impact. That's you can't really put a money value.
Yeah.
Right? That's important. I had rich investors who, when I paid them back through a refi, they were like happy on, okay, I really needed this money and you gave it to me. And it was just like a mind-blowing thing to me, because I didn't really think that they really need that money. I mean, sometimes people just invest hundreds of thousands of dollars, and we give them 100,000 back to them. They were like, wow, it's like, I needed this money and you gave it to me. I'm so happy. Right. So
yeah.
It's very fulfilling. That's what I
feel. Yeah. That's neat. Yeah. Awesome.
So do you have any secret sauce for your success?
Do the right thing, be in the right place at the right time, a little bit of luck. I do a lot of praying.
That's
help from above.
Absolutely.
And just do the right thing. I've gone through business relationship changes with business partners because, we're not always aligned with doing the right thing. And I say that if you're really going to be successful, just, always do the right thing. And what comes around goes around. So.
Yeah. I mean, I think one thing that I want to share with the audience is that I know about you and another buyer, which is part of our same masterminds, when you had that sales of that property, which had a chiller system, and it was down like 1 or 2 weeks before closing. And
yes,
I think you had a choice whether you want to disclose it to the buyer or not. And you made the choice of disclosing it, which is, I think, is absolutely the right thing to do, right?
Yeah.
You don't have to disclose that $100,000 repair, right?
Well, not only did I disclose it, James, I also bought the buyer a new chiller.
Absolutely.
He was already past his due diligence. He was closing on it. He couldn't come back and retrade me. I mean, his earnest money was more than a chiller. So I could have just said, it is what it is. I could have put a Band-Aid on it. But, this is a small world we live in,
Correct.
and I've had business partners that have said, well, gosh, you don't have to tell them that kind of stuff. And inside my heart, I feel like I do. Right.
Yeah.
And so, so I bought the guy a new chiller, and he heard about that, and he picked up the phone and he called me directly. A lot of times the buyers and the sellers don't always talk to each other because they've got brokers that represent them, and then they've got attorneys that, work all the stuff out. But he called me on the phone. He's like, I just want to say thank you. And I said, you're welcome. And I said, it's a small world, and I know how I would feel if the roles were reversed and I was buying an apartment complex and I got stuck with a pretty big bill and somebody had knowledge of it, because that actually happened to me. I bought Oats Creek up in Dallas, a 280 unit deal. And after our due diligence, and even after, we should have caught it, but we didn't. There was a couple of buildings that had questionable foundation issues. And my engineers didn't catch, and neither did my contractors. Later, I found out that the owner knew about it, the seller. And I'm like, dude, why didn't you tell me? I could have just budgeted for it and fixed it. Now I got to figure out how to scramble to pay for it because it's not on my rehab budget. He's like, I just didn't feel like it was, I didn't want to tell you because I don't want you to retrade me. And I'm like, I wouldn't have retraded you. I just wish you'd have told me, because I could have raised a little extra money to fix it. So anyway, just what comes around goes around. Secret sauce, do the right thing.
Do the right thing. Absolutely.
But you also have to analyze your numbers. With 30 years of experience, when I come across deals today, I will jump in and I will verify rents. I'll verify, rehab. I'll look at, how we're going to finance it. And some sponsors like me or you, we don't do this, but some people do. And they just convince themselves that it's still a good deal, even though the numbers don't say so. or like my gut's telling me that we're gonna make a ton of money. I don't know, man. The comps suggest that you're not, and like, well, the taxes aren't really going to go up that high. I'm like, actually, they're going up pretty high off the board, and so is the insurance, and so people convince themselves that not to listen to reality. Well, secret sauce. Listen to reality. Be honest with yourself. Listen. The numbers don't lie. Right?
The numbers don't lie. Exactly.
You might lie to yourself, but the numbers aren't going to lie to you. If you do your
it is so hard nowadays, I think, for newbies, especially who want to get started, right? I mean, they have been looking for deals for many, many months, right? Sometimes years, right? And they feel so frustrated because, the market is so good. Everybody's a champ in a bull market. Everybody's making money.
Yeah.
Like, I need to get jumping in to buy something, right? And even though they find the numbers are not really strong, I mean, you have to make a lot of aggressive assumption, right? Then they just go ahead and do it, right? It's very hard for them. I can understand that, but it is what it is, right? I mean, real estate is not forgiving in a downturn. Right?
Yeah, that's very true.
We have been in an upturn for past 9 years, and a lot of mistakes has been right?
Yeah. Well, here's a little golden nugget for our current environment, right? Mm-hmm. So interest rates are down. I believe that we're kind of reaching the top. Everybody talks about that. Mm-hmm. Well, one way to mitigate your risk is when you buy a deal in today's market, and here's what I'm doing, is I actually raise extra money from my investors for a rainy day fund. Mm-hmm. It's not applied to anything whatsoever. It's just going to sit in the checking account as an emergency. Well, you kind of have to pay some preferred return sometimes, or a return to investors for all that extra money. But I'm doing that in my own personal acquisitions just so that I don't ever have to go back and do a cash call to an investor. And I know there will things will come up that I can't, foresee. And the market's going to take a couple bumps. Well, I'm preparing for that now. So,
got it. Some very good tips over there. What are the advice for newbies who want to be like you?
Yeah. Be better than me. I think it's important for people that want to get in the industry to actually latch on and become friends with and partner with somebody that's done it before. That doesn't mean you have to form a company together and you don't have to be long-term, but at least do one deal with somebody who's done it over and over again. You're going to learn so much just by having a mentor friend on one transaction. And once you've been through a full cycle or something with somebody holding your hand, and don't be afraid about giving up some of your money to that person or the profits, you will get much more out of the education and the experience. And then you can go do it on your own without those people after you've done it once or twice. Some people like to just jump in and say, I can do this. That's my advice. I would do that.
Got it. It's a very exciting and inspiring advice. Let me go to one last question before I let you go, Glenn.
Okay.
Why do you do what you are doing on a daily basis?
Oh, man. It doesn't feel like work, James. I come to work and I look at the deals and I just love it. I mean, it doesn't feel like work. And I could have been a hospital administrator. That felt like work. I didn't want to do that the rest of my life. For some reason, I'm just attracted to this, and I get to pick and choose who I do business with. I get to pick and choose which brokers I like to do business with. I get to put together a team of people that I like to do business with. People in the office, but partners that I do business with, investors, lenders. I get to pick all that, and you can do business with whoever you want to do business with, and you can be kind of in control of your own destiny, and it's fun. That's why I do what I do, James.
Awesome.
My question is, James, why do you do what you do?
Is that really a question?
Yeah, it's a real question. What you, man?
Actually, nobody have asked me that question when I asked that question, but that's really a really good question. I do what I do is because I'm trying to make a big impact in the world, right? So real estate is just a tool for me, right? So I'm trying to figure out, basically my reason would be how I impact. I love impacting other people's life, right? That's what you said, right? You made an impact to that employee's life, and we make, as a real estate entrepreneurs, we make impact into many people's life, right? Into the community's life, into our employees' life, and into, we also give a lot of donations out, right? And how do I impact, orphans kids, kids who are orphan in a third world country, and we pay a lot of money for their education and all that. So impacting their life, and it gives you the fulfillment. That's why I do what do I do.
I love it. You ask me hard questions. I got to ask you one at the very end. I love it, because you want to make a difference in the world. I think it's awesome.
Yeah. It's as I said, money is, you can make money and you can forget about how much you made after a few years. But but impacting people's life, when you really, really see that you have touched someone's life in a big way, that comes with you throughout until you die, right? So that's important, I guess.
James, you're a good man.
Thank you.
You're putting together some cool deals. You're writing a book, and you invite people like me to come on your show and share our story. And
sure,
I don't know. I just think you're a pretty cool guy, man. Thank you.
Hey, why not you tell our audience and listeners how to get hold of you, how to get in touch with you?
Oh yeah. So my phone number, I'll start with that. Feel free.
Really gonna give me a phone number?
Yeah.
Awesome.
512-937-5964. And I have an email address, Glen with 2 N's, @obsidiancapitalco.com.
How do you spell Obsidian?
OBSIDIAN.
Okay.
Capital, CAPITAL.com. So Obsidian Capital Co.
Okay.
And
awesome.
you can also go to the website, and we're there too. So that's how.
Awesome. Thank you very much, Glen, for being in the show and sharing all your awesome tips. We have so much of value, in terms of property management, in terms of your personal thought process. And that's what I want to get out of the podcast, because sometimes, as I said, it's not only making money, right? It's also what's behind the person. That's why I do this podcast. So
all right, you can make a difference in the world. Thanks, James.
Exactly. Thank you very much.
Okay.
Talk to you soon. Okay.
Thanks.
Bye.
That's it for this episode. If you'd like to learn even more, check out James's free audiobook. It's the audio version of his best-selling book on passive investing. You can get the audiobook completely free, along with other valuable resources, by visiting www.achieveinvestmentgroup.com/free audiobook. Also, be sure to join our Facebook group too. To find it, just do a Facebook search for Multifamily Investors Group. Thanks for listening. Join us again for another episode next week. See you then.